Hi and welcome. Thank you for joining us in this webinar. Unfortunately, our Head of Distribution, Andrew Aiken at Associate Global Partners is sick today and can't join us, but my name's Adam Camillo. I'm Head of Marketing and Investor Relations at AGP. Today we have the pleasure of speaking to Ryan Quinn, Client Portfolio Manager at WCM Investment Management. He's going to be discussing the WCM International Small Cap Growth Fund. Before we begin, some brief housekeeping and a message from our compliance team. Firstly, this is a live and interactive session, so we'd love to hear from you. If you have any questions you'd like us to address, please submit them via the questions box in the control panel on your screen. We'll endeavour to get to these questions towards the end of the session. If we can't get to them today, we'll make sure that a member of the team follows up with you straight after the session. Please be aware also that this session is recorded. And then secondly, to ensure that everyone's clear, the webinar is for educational purposes only and of a general nature. It doesn't constitute any personal advice. It must not be acted or relied upon. The presentation is not an offer, recommendation, or solicitation. And with that, let's get started. Ryan, thanks for your time today.
Thank you. Happy to be here.
Great. First question, just for those in our audience that are watching today that aren't familiar with WCM, can you tell us a little bit about the company and its unique investment philosophy?
Sure. We are an $80 billion US dollars money manager based in Laguna Beach, California. We have a bias towards investing in growth businesses. And so think of sectors like healthcare technology, industrials, the typical growth sectors of the market is where we tend to find favor. We have a long-term investment horizon, so we typically hold businesses for 3 to 5 years. And in addition, we tend to have high conviction portfolios. So we don't want to be overly diversified. We want to make sure we have capital placed in a way that our investment theses, when they're right, can move the needle. As it relates to how we pick stocks, that's kind of where we get differentiated, because anybody can just narrow a universe down and say we like tech and healthcare. But for us, it falls on the way we look at a company's competitive advantage. Warren Buffett made the idea of an economic moat a very strong visual. A lot of people can gravitate to it. But we've seen in a lot of businesses in the past that where wide moat businesses get outcompeted by new technologies, new entrants, et cetera, that ended up being value traps or growth traps because those companies got cheaper, their market share got eroded. And so we want to make sure from a WCM perspective that we're buying businesses that have a growing competitive advantage, or said a different way, a positive moat trajectory. So thinking of that moat as a living, breathing thing that can either shrink, be stagnant, or growing helps us make buy decisions as well as sell decisions. In addition to the perspective on moat trajectory, we also layer in a unique perspective on corporate culture. We have benefited at WCM by paying very close attention to our own corporate culture. It's led to better business outcomes for us as a firm. And so we've turned that lens onto the companies where we invest. So we have built a framework over time that we're executing for different businesses, because as you can imagine, the corporate culture of a railroad is going to be very different than the corporate culture of an IT outsourcer, and each can have a good culture for that business, but not necessarily apples to apples in that regard. So focusing, staying committed to owning businesses that are getting better versus their peers in a concentrated portfolio. These companies are supported by well-aligned, strong and adaptable corporate cultures. That's what differentiates WCM as it relates to investing in global equities.
Just on the culture, you mentioned how you look at companies. Culture is quite an intangible thing in many respects. How do you guys look at a company's culture and assess whether you want to invest in the company or sell from the portfolio? What are the types of things that you guys do?
Sure. So I think being a qualitative input is both an advantage and a risk in a way, in that we can understand businesses that are going through either better times or worse times based on how their corporate culture is reacting. Through the formation of this framework, originally it was, do we think this company is cool? Would I like to work there, right? But at the end of the day, am I going to want to work at a railroad or a Waste Connections, a garbage company, or a highly competitive fashion house like Louis Vuitton? Just saying, do I think it's cool isn't good enough. You need to have a framework to understand how it relates to that business. And so we've boiled it down to understanding the alignment of the corporate culture with the competitive advantage, the strength of the corporate culture that is permeated across all the employees, and then the adaptability. making sure that as this business grows and is successful, it can adapt to both internal and external threats to the competitive advantage over time.
That's great. Thank you. So turning to small caps now, small caps means a lot of different things to a lot of different investors. What does small caps mean, or how does WCM define small caps?
Yeah, for the universe that we're most attracted to, we're looking at businesses that are greater than 300 million in market cap. Our international small cap portfolio has an average of about 2.5 billion in market cap across the portfolio. And we'll have a limit at the top end. We won't purchase anything that is greater than $7 billion in market cap. And to keep ourselves disciplined and make sure that we are providing that small cap exposure, we have a forced sell decision that comes at a $10 billion market cap. And over the history of the portfolio, we've sold over 40 names out that have just graduated through that hurdle, and unfortunately, went on to do great things. But the commitment of this portfolio is to make sure that we're providing small cap exposure on an ex-US international stage.
That's great. And then in terms of the last 12, 18 months, obviously been incredibly challenging for global markets generally. Can you tell us a little bit about what your main observations have been purely from a small caps perspective?
Yeah, the value rotation that occurred at beginning, at the end of 2021 into 2022 was pretty violent. It led to a pretty significant sell-off in what we would call risk assets, and international small caps would be pretty far out on the risk spectrum, and they're a bit more of a volatile asset class. And so anything that was more volatile got sold off harder. And the fact that we were a growth tilt made us even that much more out of favor, which is hard to manage through, and you never want to have headwinds to your strategy and be out of favor. But what we tend to try to do in those environments is stick to our number one rule in the playbook, and that's upgrade the portfolio. So we were getting opportunities. Don't see the world as compressed valuations being such a negative thing. We're really given opportunities to upgrade the portfolio. I mentioned that the portfolio had graduated so many businesses out of it. We were able to repurchase 6 of them because they fell back into our range. And so in those environments, that's kind of a silver lining, because the businesses are well known to us. We know the management teams quite well. We know that they're a proven business model, and really it's just the market voting their valuation down.
And then what does that mean for you, or I should say for the portfolio, when it comes to valuations on small cap stocks compared to their recent history? What are you seeing?
So in general, we saw the valuations of our portfolio companies decline by about 35%. And we have seen companies rebound somewhat here in 2023. And what's been interesting about that is it's been through earnings performance. So we're not getting a multiple expansion period. We're getting much more healthier business productivity, business opportunity set that's growing, that's allowing their stock prices to regain some of the losses they had last year.
And you mentioned that performance has been a little bit better to start 2023. What is your current outlook for small cap stocks moving forward, for the rest of the year and beyond?
Yeah, I think for the businesses that we prefer, free cash flow generating businesses that are making money, that don't rely on debt to grow, we're very bullish on those businesses. We think that there's a really unique opportunity set on a global stage for these businesses. Areas like Japan are going through a generational shift, where the large cap businesses may not be very growthy. There's individual industries in the small cap space that are really, really exciting, that we haven't seen in a long time. And then there's also a currency benefit right now with the Japanese yen being as depressed as it is. Areas like Mexico are seeing a resurgence as they came through the COVID period pretty well. They didn't require too much financial engineering in their economies. And now that the world is looking towards a deglobalization or a China plus one kind of manufacturing perspective, Mexico has become one of the key target markets to really benefit from that. So we're trying to be smart about the types of businesses that we're getting exposure to, make sure they have tailwinds and that are growing, but at the same time, pivoting towards areas that have really positive market outlooks is also beneficial.
I know that tech was one of the hardest hit sectors last year. Is there a view from WCM around tech as it relates to the small cap space, staying away from there, or thinking about what that could look like moving forward?
Yeah, I think the way we view the small cap space as it relates to tech or healthcare or any of the other industries we invest is we look for industries that are rhyming. We look for patterns on the global scale. And so when we see businesses that are doing well in one area of the world, we can look down the market cap and find a business that does a similar thing. So from a philosophical standpoint, we chose to be growth investors because of those global tailwinds. We think global tailwinds still exist today, and especially in the tech sector. AI has just reinvigorated tech. I mean, we were in a bit of a lull of an economic cycle as it relates to tech, and with the excitement around AI and all of the different applications that we can see occurring across a wide range of businesses, it's going to create a new tailwind of demand in everything from semiconductors to just kind of your basic blocking and tackling tech. So we're as excited as ever from our opportunity set and continue to be overweight those growth sectors.
That's great. And then I suppose more broadly, then from an outlook perspective in small caps, what's generally WCM's view around the small cap space, for the remainder of 2024 and beyond?
Yeah, I mean, I think there was pretty broad-based pain in the sector in the area last year. So you'd imagine that most businesses have upside in front of them. We think that that's going to be driven by global consumer spend. It's going to be driven by and impacted by whether or not economy is going into recession or not. We're not going to be here predicting any of those types of things. We're much more going to be focusing on the fundamentals of the companies, and we're finding a lot of opportunities with really strong fundamentals that have global long-term tailwinds. And so to the extent that last year was a challenge, we really wanted to use that opportunity to upgrade the portfolio, and we think we have one of the best portfolios we've ever had together currently.
That's great. And then I suppose, how does that played out in terms of performance in the fund? Can you speak to a little bit around the performance in the short to medium term of the strategy?
2023 has been a little bit of a rebound from 2022 in that the businesses that didn't work last year, software as a service, cloud computing, those types of companies, those have done very well year to date. The businesses that held up last year, some of the energy businesses, commodity related companies, some of the bank financials did not do well. In fact, we had a bit of a mini banking crisis in the United States to start the year. Thankfully, we did not have any exposure to those banks in any meaningful way. So, so I think that from a market perspective, we're still going through a bit of a churn. There's not a real direction per se. I think that when the dust all settles, our style will be in favor in terms of owning high quality businesses that have very clean balance sheets, that are strong free cash flow generators in a wide range of areas of the market, whether it's software as a service, high performance computing, semiconductor chips, or some of the blocking and tackling healthcare businesses that we own, as it relates to the increased demand in biologics and the increased consumption of healthcare in global economies. So we think we can approach those themes with quite a wide range of names.
You mentioned at the beginning around WCM's investment approach and style. Can you tell us a little bit around how the discipline around the process works in incredibly challenging markets like this?
Absolutely, yeah. I mean, I think our focus on corporate culture really carries difficult periods. And if we're being honest, the last 10 years has been a period where we probably have had a rising tide or pretty strong tailwinds. And it's been an environment where we've been really able to hone our expertise in corporate culture. The adaptability and the strength of the culture will really shine in difficult environments. And when you think about a company's growing competitive advantage, the company's culture is going to define employee behavior. Employee behavior will decide if a company's competitive advantage grows or shrinks. And so in periods when the market's really good and you have tailwinds to your company, that culture will be important for making positive decisions to take advantage of that time. But also in periods like we're in now, where you're facing headwinds, where it's difficult in business, where prices are higher, you're trying to pass price increases through, your corporate culture will really help you get through that difficult time. So in an environment where we have an opportunity to really make a difference as it relates to our differentiated muscle in corporate culture work, we're excited about the opportunity to see those things play out and also help us make better decisions in terms of portfolio management.
And related to that question, the investment teams had a history of capitalizing on opportunities in the market, especially markets like this. Is there any particular, you mentioned them before, either names or sectors, regions that are exciting you and the team at the moment from a small cap perspective?
Yeah, I think it's pretty broad based, right? I mean, if you think about the trends that we're seeing in different marketplaces, there's increased demand for food delivery. There's ever ongoing advances in mobile payments and electronic banking. There are advances in healthcare, where in some cases, simply owning a business that makes the vials that hold liquid medicines can be an attractive business. There's a resurgence in travel. So some of the airlines, low-cost airlines across the world, we're excited about. In some cases, there are airports that are fairly strongly cash flow generating businesses that we can get exposure to and really enjoy over time. So the opportunity set's quite broad, and we think that we did some really good work last year upgrading the portfolio. And while we don't think we're finished managing the portfolio, we certainly feel like the work that we did last year should be paying off in the coming quarters.
That's great. And then lastly, just around the actual small cap market fund itself, why do you think now might be a good time for investors to consider a small cap fund or strategy, especially in this market where it is challenging?
Yeah, I think an actively managed small cap strategy can be attractive from a couple reasons. First off, in the small cap space, there are a wider range of good companies and bad companies, right? So being active with a manager that can select those good companies and avoid those bad companies is important. I think in this environment, the businesses that can shine and generate free cash flow have a really solid runway of opportunity in front of them. And the market has done a pretty even job of selling the sectors down almost evenly throughout last year. So a fairly leveled playing field of valuations that we haven't seen since, call it 2014. And if you can use that environment of cheaper prices to load up on the highest quality businesses, and if you have a disciplined philosophy and process around competitive advantages and cultures, we think that there's an opportunity to generate positive performance coming out of a period where we've gotten almost a total reset in the marketplace.
Ryan, thanks very much for your time. And thank you to everyone who's joined today. If you asked a question we didn't get to, then a member of our team will follow up with you directly after this session. If you have any questions about the fund, please feel free to contact us on 1300 052 054, or you can email us at invest@associateglobal.com. Thanks very much for joining us and have a great day.